Hey guys, Kill Stokes here, Forex trader, trading coach, co-founder of Tier1Trading.com, and welcome back to another Trading Edge video. If you guys are brand new, thank you for finding the channel. The Trading Edge typically is a video that my business partner Jason Grayson and myself put out every day on our Tier 1 platform. That way our members can see what's on our radar for the day to come. And usually I try to come in and do a weekend edition of that on YouTube, sharing with you some trading ideas. However, today is going to be a little bit different, mainly because I have nothing new on my radar. So I want to take more of an educational approach and talk about two main topics that came up throughout the week. A little bit later, we're going to take a look inside my live room at some recorded footage and talk about, really follow up on last week's idea on the euro dollar. If you guys remember, we talked about the euro coming down into multiple levels of structure and trying to figure out how to handle that. We're going to talk about that situation and really look at the differences between a trend continuation trader and a counter trend trader. I think one of the biggest misconceptions out there is that a trend continuation trader has to think one way and a counter trend trader has to think another way. Well, in reality, your technical analysis should all be the same. If you're reading a price chart correctly, the trend continuation trader and the counter trend trader should be seeing the same thing. The only difference is how you plan on attacking the situation, and you'll see that in the clip to come. But first, I want to take a look at a recent trade on the New Zealand dollar. It's not going very well. Last I checked, it's not at a danger point. But I want to talk about how to manage a trade when it doesn't seem to be going in your favor. So we'll hop into the charts first, and then we'll be back with the recorded session from our Tuesday live room. So we're going to get started on the New Zealand dollar, and this is a trade that I fired off this week. It's been a pretty decent week of trading. I think I took about 4 or 5 trades, which is typically around my average, or at least my recent average. Hasn't been the most spectacular week. I'm about break even. I'm down with new trades I took this week, but had a nice winner on a second half of a position that I took last week, which is put me up. But if we're assuming this may lose, that'll put me right at break even, which I'm okay with. If you guys have been following me throughout the year, I've been sharing a few of my updated results, and I've been kind of batting out of my league, right? Typically, I'm a 55% trader. I'm about 70% right now, so I'm waiting for that drawdown. And it's funny, I saw a nice tweet by Mike Bellafiore the other day where he was talking about if you can keep your bad days from getting worse, that's just as good as having a winning day. So kind of just managing that drawdown. Risk management is the key. But speaking of risk management, so the original idea for this trade was a head and shoulders pattern, right? And not a valid head and shoulders pattern yet, but an aggressive look at a head and shoulders. So if we just jump out to the daily real quick, and you may remember this from last week as we were talking about New Zealand news and a potential cipher. But you can see that we have a head and shoulders forming, right? We have this right here, this right here, this right here. It's not your traditional best head and shoulders. Typically, you want to see that after an extended trend, so it's not the greatest one in the world, but still a solid opportunity nonetheless. As you go down to the 4-hour, what I was looking for was an aggressive way to enter at the right shoulder, which is over here, and I did so on a double top. Now, what's important to realize about the head and shoulders pattern is that it's not valid until that neckline is broken. So when you're taking this approach, and this is one of 3 that we teach in our course, when you're taking this most aggressive approach, it's important to understand that you're trading something that hasn't occurred yet, but you're anticipating it to occur, which is why I use such a conservative entry approach on it. But as you can see, right, so our initial double top, very symmetrical, very beautiful, is not working out too great. We started reacting off of this double bottom. We're all excited. Yeah, the market's going our way, but we refuse, right, to test our previous structural lows. So we put in higher lows and equal highs. And this sets up something called an ascending triangle pattern, which is actually a signal for a breakout to the upside. So if you could imagine the position you're in, if you took this trade, you're short. The technicals have changed, which is normal, guys. You know, double tops and double bottoms can easily turn into wedges and pennants and opposite signals, right? So we took a short here, and now we're getting a signal for a long, and the question is what to do. And I put this out on Twitter, not the question, but I put out on Twitter today, hey guys, the New Zealand dollar long that I'm in is now giving bullish signals, blah, 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 something, something, something. And there were a lot of questions that came back saying, well, what do you do? Do you exit this situation right now? Do you stick with it? Do you move your stops up? Do you move your stops in? And I say, I do nothing. I do nothing. It was in the book Pitbull by Marty Schwartz, where he got a letter from one of his trading mentors that said 90% of the work that you do in trading, and that number could be higher, 95 perhaps, 95% of the hard work that you do in trading comes before you ever take the trade. And for me, that's developing entry, stops, and targets, doing your analysis, deciding where you want to enter, deciding where stops go, so where do you know if you're wrong, deciding where targets go, where do you predict the market to go if you're right. After you're in the trade, aside from trade management, there's really not much you can do aside from let your prediction play out. And I told the trader on Twitter this morning, I'm not doing anything. I'm not moving my stops up. I don't want to expose myself to any more risk. I'm not moving my stops down. There's no point in doing that. My stops are in a specific location for a specific reason. They tell me that my initial reason for entering the trade is wrong, and they're at a level that I'm comfortable enough taking the risk. And of course, that comes from a technical perspective as well. So it's not just like I'm only comfortable taking 50 pips of risk, so my stops are 50 pips away. No, it's based on the technicals, where price action shouldn't go to if what I'm reading on the technicals is correct. But there is another way to go about this, and I talked to my traders about it this week. It's called the graceful exit technique, and it's basically where if the market gives you a signal that goes against your original signal, basically something that says, hey, your original idea for taking the trade is wrong, you're allowed to exit if the market gives you a chance to get out for less pips. And that's another form of risk management. Now, I also tell our traders all the time, this is not something I use. And the reason for it is I just don't believe in it, right? I don't mind taking losses, right? Losses happen all the time for me. It's normal. It's part of trading. It's part of doing business. What does get under my skin, however, is being in a position where I make a prediction, I place the trade, I take it, I do everything I'm supposed to, and then I exit the position, used to be out of greed or fear, I exit the position only to see that I'm right. And even if you're doing that for a technical reason, you're 100% right in following your plan if you're supposed to do the graceful exit, that's just something that always bothers me. And my mindset is process over outcome in basically everything. Winners don't get me excited, losses don't get me upset. But this is still one thing that bothers me. If I were to exit my position right now and then see it roll over to my initial prediction, that still sticks with me, and that puts me in a very delicate psychological state, which is something we never want to be in as traders. So I'm not doing anything with this trade. My stops are where they're at. I'm going to trust my stops. I'm going to trust my technicals. And even though we're getting a signal that says, hey, we may be setting up for a bullish break, I'll wait until it happens before making any type of movement. And a good example of this also came last week. If you guys remember in the video, I think it was the weekend edition. If not, it was probably maybe the Tuesday one. But we were looking at the euro yen. And we're looking at it on the 60th. I told you guys this was a trade that I took late last week. If I can remember where it was at, it had to be right here. Late last week. And I believe during the video, we were trading kind of down here. Is that about right? February 8th? That sounds like a weekend. Yeah, Friday trading down here. And we were actually going through the money management spreadsheet I showed you guys, and I was typing in a loss because I was assuming we were going to lose, right? The technical level that should hold was broken. We were trading below it. I said, hey, we're probably going to lose. Let's type this in to see what the results say. Well, this would have been an example of using a graceful exit where market comes down and maybe we come up a little bit instead of taking, I don't know how much this was. Let's just see it real quick. Stops are right underneath that level, so good stop placement if I tap myself on the back for a little bit. Instead of taking a 42 pip loss or whatever it was, let's just get out for 10 pips or 12 pips, right? Save myself some loss, and that's okay. But you can see what happened after that, right? Price action rallied up to hit targets. So by doing so, by taking that out, I would have missed out on a winning trade, and that would have bothered me massively. So again, I'm not saying that the graceful exit is a good or bad thing to do, but part of trading, a big part of trading is knowing yourself, knowing your personality, knowing your philosophy, what type of emotional triggers are going to set you off, and making sure that you don't put yourself in those situations. And that's what we mean by really creating your trading strategy and creating your plan around you to fit your personality, and no one else matters. So before we get into the live room recording, if you're interested in joining us in the live room, it is a part of our 14-day trial membership, right? It's just $1. You get on the platform, you get access to a lot of things like the London live room, the New York live room, our daily Trading Edge videos, our accountability sessions, our software, our community chat. There's probably some other stuff that I'm forgetting, but you get it all as part of your risk-free 14-day trial. And by risk-free, what I mean is that there's no auto bill. So once your 14 days are up, there's no secret bill that comes and signs you up for a premium membership. You just lose access to everything. So make sure you check it out. And before you get started on that free emergence training course that comes with it, make sure you introduce yourself to the community. That's big. Get the nervousness out the way and say, hey, I'm here to learn. You guys are experienced. Come help me. All right. So let's check out the live room recording, and hopefully you enjoy the conversation. You can kind of just continue your analysis. Now can't be a 2618 because we don't have a double bottom. Joseph says that's me right now. Good. I'm glad I'm talking to you guys. Look for a double bottom at the current level. Nope. Wouldn't be a good idea. Trend 2 bearish for long. So Alex says stay away. Now let me ask you this. Let me ask you this real quick, Alex, while we're on the subject, right? What does 2 bearish mean? What makes a trend 2 bearish for longs? Let's kind of challenge that thought process. I like to make you guys think. What does 2 bearish for long mean? And again, Carney speaking about 7 minutes. And Cody said what I meant was if we get another double bottom here, I'll look for a 2618. And this is an open question for anybody, not just Alex. He just happened to type it in. But what is 2 bearish? Anyone else have an idea of 2 bearish for longs? Daily has been plummeting on the euro dollar. Price making more lower low, lower highs on the hour and 15. Okay, so that's how let's define. We're defining that as 2 bearish now, or 2 bearish trend. Now let me ask you this: do trends go forever? And again, we're just challenging the thought process. We're not doing anything about trading. Do trends last forever? No. Okay, so when do trends typically end? Right, the trend is your friend until it bends. When do trends typically end? In the middle of nowhere, and obviously the market can do whatever it wants, whenever it wants, but at the middle of nowhere or at structure, right? So trends typically end at structure. Can we not make the case that we are at structure on the euro dollar? Given our previous conversations, we are actually at multiple levels of structure. So can we not make the case that we're trading in the area where we would expect the trend to end? Did I put a splitter into that thought process at all? That's my goal. I just want to mess with your mind. I like that idea, Carl, and we'll get back to that in a little bit. But yeah, maybe let's look at this real quick. All right, so where would we expect the trend to end at? If the trend is too strong, right? Nothing goes down forever, nothing goes up forever. So if all trends come to an end eventually, the question is, where do we expect trends to come to an end at? Is it at structure? Is it in the middle of no man's land? The key is, and I'm not saying you're doing this, but a lot of traders sometimes get fearful and they make up excuses to really promote that fear. Where they say, okay, Akil, we're in a strong bullish trending or a strong bearish trend, right? So I can't get involved in a counter trend move, which this is counter trend trading, by the way. That's what counter trend traders do, right? They anticipate the end of a move. I can't get involved in this move because the trend is so strong. And what we want to ask ourselves is, are we saying that based off of something technical on the chart, or are we saying that off of fear? Right? Is there something technical on the chart that says, there's no way the trend's going to reverse here? This would be stupid to buy. Or are we saying that out of fear where it's like, I don't really want to buy because, man, we've put in 1, 2, 3, 4, 5, 6 bearish daily candles in a row, and we're saying that as an excuse not to get involved in something. And that's what we want to we want to understand where that thought is coming from. If it is on the technical side, perfectly legitimate. You should always follow it. Hey, man, price is not at any level of interest. No way I would buy here. Perfectly fine. If it's on the emotional side of things, that's an excuse. And we don't want to base trading decisions off of that. Does that make sense, guys? So that's why I thought it was a good example. And I'm not saying you're doing one way or the other, Alex, but it was a perfect example of giving this. I always look for reasons to give lessons, especially on days in slow market movement. Perfect example of that lesson. Because believe it or not, many of us will see opportunities and it could be a perfectly valid double bottom and they're supposed to take double bottoms and they're like, well, that momentum was a little bit high on that second bottom. Probably should be seeing less volume if there's really going to be a reversal. So I'm not going to take this one. And it's like, well, is that actually happening, or is that what just, or did you secretly not want to take the trade? Maybe you took a previous double bottom and you lost. It's still fresh in your mind, and you don't want to take this one, and that's an excuse that you created not to take it. So we want to know where our thought process is coming from, and this is why we do the IPDE, right? This is the whole point of IPDE, because we know right away if we should be looking for an opportunity or not. When we identify what the market's doing, we're asking ourselves the question, okay, where is price action trading? And in this scenario, right, I think it's safe to say we are trading at structure. Am I right? We are trading at structure. Now, typically, right, if we didn't have any of these other levels down here, right, if this were the key level of structure right here, let's say this thing didn't exist, at least the way I would be reading this, I would say, okay, I identified prices trading at structure. If we hold that level, then I'm looking for a buying opportunity. And this would be a no-brainer buy for me, right? Yes, we're coming off a massive bearish move, but these moves don't last forever, right? We think about what happens in a massively bearish move, right? There's a lot of sellers in it, right? There's a lot of sellers up here. There's a lot of sellers up down here. Right? There are people selling it all the way down, all the way down, all the way down. How many sellers do you think exist right here? More or less? Less, right? The amount of sellers have decreased, right? Decreased, right? Think about going to the supermarket and something is on sale. And it's on sale and you're buying it up, you're buying it up, you're buying it up. What happens as the price gets higher and higher and higher and higher? Are more people buying it or less people buying it? Less people. Right? Same thing with the chart here. It's going down, it's going down, it's going down, right? Lots of sellers here, make that money. Lots of sellers here, make that money. Lots of sellers here, make that money. As we get closer to here, sellers are like, yeah, maybe not anymore, right? So the selling pressure is starting to dry up. Now, what else is happening at this level, right? You see previous level of structure support. And there are two things happening at this level. Who else is starting to become interested? Are buyers interested right here? Maybe a little bit. Are buyers interested here? Some, I'm sure. Are buyers interested in here? Are buyers interested here? Right? The lower we get, are there more or less buyers interested? I would say more, right? I would say there's more buyers interested down at this level as we come towards structure support. Why? This is a level that has held before, right? So more buyers are interested. Now, we have less sellers interested. We have more buyers interested. What else is happening in this level? What are the sellers now becoming? What else do you think the sellers are doing? The sellers are starting to become buyers. Now, some of you guys that are new, right? You haven't been through the foundation course. How can sellers become buyers? Well, guess what? Would you presume that some of your sellers are taking profits in this level? They're saying, I'm going to take some money off at previous structure support because that's a smart thing to do. I caught this nice move down from 115s, right? $1.15s to $1.13s. I want to take a little bit of money out, right? In order to take money out, if you're a seller, you need to buy, right? So not only do we have not only do we have selling pressure getting less, but we have sellers that are becoming buyers, and we have new buyers that are starting to be interested, right? That smells like the end of a trend, or at least a short-term reversal, a little bit of, I call it relief, where the market does something like that. And then maybe the sellers are like, no, we really like this level, and they'll push it down even further. But that smells like a little relief. So understanding the market that way. And again, that's a technical perspective. I guess is that a psychological perspective, understanding the moves of the market? I look at it all being technical. But from a technical perspective that way, it stops us from making the emotional decision of just saying, oh my gosh, 5, 6, 7 red candles in a row. This trend's going to go on forever. It's not going to go on forever. It never does. All trends end. Trust me. If trends didn't end, there'd be one person that bought something a long, long time ago, and they'd still be holding it now forever because that trend never ended, right? All trends end. The question we want to ask ourselves is, or as traders, what we want to try to determine is where, if you're going to be a counter trend trader, where? And on the other hand, if you're a trend continuation trader, when is it going to resume? When is the pullback or the retracement going to end? And when is the next extension going to resume? And those have to be technical-based decisions, not emotional-based decisions. Now, again, in this specific scenario, we talked about this earlier, right? What do we have down here? Previous level of structure. You know how I feel about multiple levels of structure. So when I get past my I part, I identify this. I also identify the lower level of structure. We had a whole conversation earlier about how I know my trading plan. I know my trading style. I know this isn't a trading opportunity I can take advantage of. So I don't have any interest in it. But that doesn't take away from the analysis. You guys follow me? And I know there were a few questions, so I'll get back to it. Alex says the last bearish candle was longer than before. Doesn't look like selling is dying out? What's the previous candle? What's the current candle doing, Alex? That doesn't look like selling. Does that look like selling is dying out? Hasn't broken high yet. Okay, well, let me ask you this question then. Do you sell at support? I think that's the most simplest way we can put it. Do you sell at support? Do you buy at resistance? Why not? Strong selling, strong bearish candle here. Why not? Why would you not sell this position right now? Convince me why I shouldn't sell right now at market. Strong bearish candle, as you mentioned. Why shouldn't I sell? And again, Carney speaking now. Hopefully he pushes up this pound pair. I still have half a position on from the pound yen trade from last week. Support. But it's a strong selling candle. We're expecting the trend to continue, right? Strong bearish candle, no sign of weakness or the trend weakening. Why shouldn't I sell? I can make the case RSI, right? RSI is lower than the previous low, so there's more strength in that direction as well. That's added strength that the RSI is lower than previous. Added strength. Convince me not to sell. I'm going to sell right now. I swear I'll do it. I swear I'll sell right now. I swear I'll do it. Come on, convince me not to sell. I'm not going to do it. I'm going to break my rules. But here's the point, right? You just made my point for me. you can't find a reason that we should sell. Right? But there's this fear that the trend is not ending. The trend is strong bearish. If you really felt that way, that it was so bearish, wouldn't there be a reason to sell here? Technically speaking. Let me pop over to Dollar Canada real quick. Check out this cipher on the 60. But right, wouldn't be, if this were a strong selling signal, right? Wouldn't it be easy to convince yourself or convince someone else to sell? Would it not? I'm long Dollar Canada at market. Thank you, George. So that's something we need to think about, guys. Again, we need to think about, are we making decisions from a technical perspective or another perspective? I did not even see this one this morning. That escaped my radar. That's what friends are for. Let me just shoot this into our chat real quick. But great decision. I need to load up our chat first and foremost. Let's do that, Akil. Don't sell at support. Obviously, wait for pullback and sell higher with a pullback at support. Okay, so you're saying that you wouldn't sell here, but you would wait for a pullback and then look to potentially sell, right? So that goes against your theory of this is a strong selling candle, right? That makes a difference. That's why we shouldn't buy. Because if you're predicting a pullback, you're predicting something like this, correct? You're predicting for the market to go a little bit higher and then maybe eventually pop down. Well, guess what this trading opportunity is? Who takes advantage of these trading opportunities? This is all a counter trend trader is looking for. This is what a counter trend trader wants. This is a winning trade for a counter trend trader. Do you guys understand that? That's a winning trade. If Cody's looking for a 26-18 reversal here and he can catch a move from 112.73s up to 113.40s, he's got a winning trade, probably a 2-target winning trade. So that's exactly what they're looking for. That's what a counter trend trader wants. Good luck to them. I don't think you get it. You just told me this is what you expect to happen, right? Didn't you just tell me that? You would expect a reversal and then a continuation down? And again, we're dealing with different philosophies here. Obviously, trend traders and counter trend traders see something. They have two different philosophies on the market, just like fundamental traders and technical traders. But I hope you understand. You just made this case, did you not? Did you not just say that you don't expect a continuation right now, bearish, but after a pullback, right? You just wrote in a pullback, then a continuation down. Wait for the pullback and sell higher, right? So this is your idea. I don't know why you're saying good luck to them. You just told us this is what you predict as well. Give me a second, guys. I'm gonna get this Dollar Canada trade into our log. USD CAD 1 hour bullish cipher. 132.50s. There we go. Perfect. Add a little chart action then. Make sure it loads up. Where's that chart at? There we go. Dollar Canada. Make sure we say George spotted this, so if it fails, we can shift all the blame to him. then we're good to go. All right. Any current questions on the euro dollar? I know we've had a very intense discussion here, but hopefully it made sense. Did that make sense, guys? This hour-long walkthrough, whatever we spent on euro dollar. Was this discussion beneficial? That's all I hope. I hope the thought processes were beneficial. But the point that I'm trying to make is, and I'm not trying to throw anyone under the bus, but it seems like, would I be correct in saying you're a trend continuation trader, Alex, or have more of a trend trading philosophy? Yeah. So the point is, we're both seeing the same thing. We're both seeing the same thing. And this is the difference between a trend trader and a counter trend trader, right? The market, when trending, moves like this. The differences are, trend continuation traders are, right? They're looking for this pullback and looking to trade this pullback down to the next extension, correct? Counter trend traders are looking for this reversal and looking to trade this retracement. So you are projecting the same thing. Even though you're thinking that, hey, we're going to continue bearish, you're not thinking we're going to continue bearish right now. You think there's going to be a little bit of relief before that bear trend continues. That's the same exact thing that a counter trend trader is thinking as well. Cody's looking for a little bit of relief. He's looking to catch the pullback, get out of the market. You're looking to catch the pullback and trade it for the extension. But you're both looking for the same move. So even though it kind of came to fruition when you said you're looking to sell, right? You wouldn't look to buy, but you're not expecting a continuation quite yet. You wouldn't look to sell right here. You are looking for a reversal. And that's the same exact thing that a counter trend trader is looking for. The difference is what part of the move they're catching. A counter trend trader is looking to catch that little bit of relief, while a trend continuation trader is waiting for the relief, the pullback, and looking to hop on once they believe that pullback is complete and once they believe the underlying trend is going to continue. But it's the same analysis no matter what. The only difference is in the execution, what part of the move they're trying to catch. But it's the same analysis, and we both agree. Neither of us would be interested in selling at right here. So thank you as always for checking out the Trading Edge video. There was a subscriber that left a nice message the other week congratulating me on 42,000 subscribers, and I had no idea I was there. But he's basically said, Akil, let's try to get 50. And well, I'm never one to shy away from a goal, so let's do it. Let's make that a year-end goal to build this channel to 50,000 subscribers. That would be awesome. I don't know if 50,000 has any relevance, but it's a nice round number, so I like it. So in order to do that, I need you to do me a favor, guys. I need you to continue to like this video. That makes YouTube rank it so it's shown to other people. I need you to share this on social media, whether it's the Facebook, the Twitter, whether it's an Instagram story, it doesn't matter. Just get the word out. Tell me something that you liked in the video. Feel free to tag me as well. I always respond and I will retweet. And also leave me a comment. Your comments have been amazing. I've been sharing more and more of them on social media, just showing people what we're doing here at Tier 1 Trading. And it's been great in growing the right type of community and not just the amount of subscribers. That doesn't matter. We want the right subscribers, serious traders with the right mindset about the markets. And when you surround yourself with successful individuals like that, you tend to become a little bit more successful in your own right. So if you guys can do that, I'll continue pumping out videos. Probably won't be able to do one next week. I'm going to be on the road for a little bit, but hopefully I'll be back at it the week after that. Until next time, plan your trade, trade your plan. Thank you as always for joining me, and you guys have a great week.